Good morning and welcome to NYSE TV Live. I'm Kristen Scholler coming to you from high above the iconic trading floor of the New York Stock Exchange. And this morning, Legacy Education, which trades here on NYSE American under the ticker symbol LGCY, will celebrate its recent IPO by ringing the opening bell. We do have a very busy hour on tap this morning. And ICE's New York Climate Week festivities, they took place inside this iconic institution Thursday, with industry leaders joining us throughout the hour to discuss how they are combating the effects of climate change. Meanwhile, as the impact of last week's Fed decision does continue to reverberate across Wall Street, Intercontinental Exchange's president of Fixed Income and Data Services, Chris Edmonds, will join our Trinity Chavez to discuss how the news is impacting his business unit. Well, over the course of this past week, the New York Stock Exchange has hosted several world leaders as the UN General Assembly commenced here in Manhattan. And I'll speak with the person who helped lead those efforts for the exchange later in today's broadcast. We have a lot to get to when it comes to both UNGA and climate. Of course, we continue to have our eye on the market as we always do, and the major indexes looking to round out the week on a positive note. The NASDAQ Composite leading the way, the S&P and the Dow looking at fractional gains as well, all coming after what has been some solid economic data and a better than expected read on inflation earlier this morning, the Fed's preferred inflation gauge. Kevin Gordon from Charles Schwab will join me a little bit later in the show after stocks open to talk about what it means for you and your money. Well, before we dive into all of this, I do want to quickly highlight what has been a busy day that unfolded at the stock exchange yesterday. 3 companies completed their debuts and started trading here at the exchange. BKV was one of them. And of course, their opening bell we covered right here on NYSE TV Live yesterday with a whole host of executive interviews. Guardian Pharmacy and yes, Legacy Education is going to round out that third IPO, and that company is going to celebrate the opening bell today. Well, the for-profit post-secondary education company aims to provide career-focused education across the healthcare industry with degrees for fields like nursing, medical technicians, and dental assisting. In total, the California-based company has 3 nationally accredited schools across 5 different campuses: Central Coast College, High Desert Medical College, and the Integrity College of Health. We'll be speaking with LeeAnn Rohmann, Legacy Education's founder and CEO, a little bit later on in today's program after she rings the opening bell and we find her on the floor. Well, also taking place yesterday, as I gave a nod to earlier in the show, right here inside the stock exchange, were a pair of Intercontinental Exchange New York Climate Week events. They brought together industry experts from the investment, business, and climate communities to facilitate engagement and empower participants with the latest knowledge and insights on where climate meets capital markets. Well, through a series of panels and fireside chats, Carbonomics 2024 explored how climate science and economics can intersect to advance net zero initiatives. Meanwhile, Climate and Capital 2024 brought together industry leaders from the investment, business, and climate communities to address climate risk with data analytics and technology. And it's been a busy week, really, across Manhattan when it comes to the climate. And so joining me now is Adam Lake. He's the head of engagement for the Climate Group. That's a nonprofit that is hosting a Climate Week in New York City. Adam, thank you so much for joining.
Thank you for having me.
It's great to have you here at the Stock Exchange. What were your takeaways from this week in Manhattan?
I think the number one thing I reflect on, and I came in to head up Climate Week in 2018, is the humongous growth that we're seeing. So last year was a record-breaking year with 585 official events. This year we got to 900, so we're seeing a 50% increase just in 1 year. And I've not been to all 900 events, but I've been to a lot of them. What I'm really seeing is a huge increase in the amount of CEOs that are coming here, and the level of conversations happening. That's something that I'm taking away from the week the most.
Let's talk more about those CEO conversations in a moment. Climate Week, of course, ran parallel and in partnership with the UN General Assembly. We had all sorts of world leaders passing through these very doors: President of Argentina, South Africa, the European Commission Commissioner as well, the President of the European Commission. What is the commitment that you need to see from world leaders when it comes to the climate?
I think the main commitment I want to see is commitment. One thing that I think a lot of people realize when they come here, climate change is not an individual department. It's something that needs to be integrated across every different area that you work in. Transportation, health, the economy, jobs, buildings, housing. And I think some leaders do it very, very well. Other leaders just need a little bit more support to integrate those things. And I was at the event yesterday with the UNGA at the Met. There were international delegations there. And I think one of the things that comes out for me is it's really positive that different world leaders are speaking behind closed doors and asking each other, how can I do this better? So that's a good thing to see. People are wanting to make those changes.
I want to pivot to an event that we see as storm, in fact, impacting parts of America, Hurricane Helene hitting the U.S. What is the need that you need to see for climate resilience when it comes to the private sector?
I think, I speak to a lot of companies, and that resilience piece is humongous. You cannot underestimate it. This isn't just a question about what might happen by 2030 or 2050. If companies are not resilient, they might not make it through to the end of the year. And I think these extreme weather conditions is making that very clear to companies. I think there's a mixture of, for large companies, sometimes they have the resources to be able to manage this themselves, but for small businesses, I think the government needs to have a role in providing support there as well. But resilience is definitely something we've been talking a lot about this week.
What are the recommendations that came out of Climate Week this week in New York City when it comes to transitioning toward a green economy?
So we, as I just mentioned before, 2030, 2050, these are the standard stock in trade that we talk about. But this year our theme is It's Time, and we've come forward with a list of proposals of things that we want companies to do this year.
Yes.
And governments as well. I'm not going to run through the whole thing, otherwise we'd be here all day, but just to give an example, looking at reducing your energy usage in a building by 5%, especially here in New York, that can have a huge impact. So, the chats that we're having this week is all about looking at the short-term things that we can do right now to make sure that we're staying on track.
What is the financing that's needed to reach these goals?
Again, I think it's a mixture. I think the Inflation Reduction Act has been hugely significant. And as we see the flows of money going through to all states across America, that is really having an impact. I've been speaking to a lot of people this week, a lot of chief executives who are also saying, when they've invested in sustainability, actually it's made them more profitable and more efficient. So I think the bigger companies are doing this quite well, but I'm also speaking to a lot of smaller businesses who are finding it difficult. And I think that's an area that we want to be doing a lot more work on, is how can you make sure that everyone has access to the efficiencies and the profits that come through being more sustainable.
We talk a lot about artificial intelligence, how it is changing the game and the capital that is following AI. How can AI be used for good when it comes to the climate?
There are so many events this week about AI. It is definitely the talk of the town. For me, it's a double-edged sword. So AI can be a wonderful solution. It can provide a lot of help and a lot of support. I was speaking to a scientist yesterday who was telling me about, they're looking at a boat that uses AI so it can be powered by wind, and the algorithm that the AI supports allows it to go into the wind. There's cool stuff like that you're seeing, which is great. But the other side of it is AI uses a lot of energy and a lot of power. So there's risk involved as well. So it's great people are having conversations this week about it, because we need to make sure that we're getting those opportunities, but we're not getting cut down by those risks.
I'm just curious in terms of transportation, your recommendations there. We know it's such a large emitter, of course, here in the environment. Yeah,
transportation is huge. The angle that we take on this, and we run an initiative called EV100 to support electric vehicles, the onus cannot be on the individual. I think a lot of people would like to drive a Tesla maybe if they can afford it, but most people can't. What we need to be looking at is how can we make it so that the wider conditions make it easier for people to opt into those choices. So it can be about charging infrastructure. It can be about making sure that there is, leaseholds are buying lots of cars, so there's a second-hand market there as well. And we look at trucking is a huge area. How can we work with companies to make sure that their haulage is going to electric? So I think that's very, very huge. Airport transportation is another area, and shipping there is so much development going on at the moment as well. So Moll and Maersk are a huge organization. We're talking to organizations like them and seeing what difference they can make. So you're right to pick up on transportation because it is a biggie.
Adam Lake, such a busy week. We appreciate you joining us here at the Stock Exchange. Adam Lake is the head of engagement for Climate Group, of course, the nonprofit hosting Climate Week.
Thank you.
Well, after this break, we'll zoom in on the fixed income space and the role that Intercontinental Exchange is playing to help clients in a few moments.
Ron, Liberty Energy is a young company with a 12-year history. Talk to me about the origins of the company and how you've built a dominant position in the industry over the past few years.
Yeah, we are a very young company, not a huge amount of history relative to many of our peers, but started with a very simple mission. Our goal was to just very simply build the best company in our sector in the oil field. And to do that just meant being the place that people chose to want to work. We wanted to be the supplier that our customers would choose. And we wanted to be the customer of choice to the suppliers that we worked with. And we thought if we were great at all of those things, if we could create an amazing culture that attracted wonderful people, that would translate into great service quality on location, we would become the provider of choice. We never set out to be a big company. We just set out to be the best, period. That was it. And what we have found has been that if you deliver at the highest level for customers, they want more of that. And so while we never set out to be big, we have, by virtue of delivering great service, grown to be the second largest service company in North America now. It's been a wonderful journey.
Now, you have a strong track record of cash return on invested capital over your history that has averaged nearly 50% higher than the S&P 500. Congratulations on that.
Thank you.
What are you doing today to ensure continued returns?
Have to continue to focus on the things that have gotten us where we are today. Of course, we live in a cyclical world. Oil and gas has been a very cyclical business. In the 12 years we've been in business, two of the biggest downturns I've ever seen in my career, probably. And so as we think about what we need to do going forward, that means continuing to invest in technology. So we're right now transitioning our fleet to a next generation version of a fleet, running 100% on natural gas and retiring diesel as a fuel source. That helps enable our customers, save money in their completion.
Welcome back to NYSE TV Live, everyone. Our parent company at the Stock Exchange, Intercontinental Exchange, through its ownership of the Stock Exchange, has a connection to bonds that goes back more than 230 years. Its coverage comes from two sides, pricing data and analytics through ICE Data Services, supporting more than 13 million financial instruments, and ICE bonds, which offer deep liquidity pools that support multiple trading protocols and solutions for professionals in the market. Well, these innovations didn't just happen overnight. NYSE's curator of archives, Anna Mello, shows us the rich history of the bond market and its current role in global markets. Take a look.
If not for the sale of municipal bonds, the New York Stock Exchange would not exist. By 1790, the United States had incurred $80 million in debt. Alexander Hamilton, first Secretary of the Treasury, was called upon to draw up a report on the health of American economics, the result of which was the passing of the Funding Act of 1790. This act nationalized and consolidated the debt held by the states, only recently the 13 colonies, to be sold off in the form of American Treasury bonds. This is bond certificate number 3113, issued by the Treasury of the United States and dating from October 20th, 1791. It was purchased by Jacob Faitama of Amsterdam for $12,519.30 and pays an interest rate of 3% per year. Naturally, they were sold in a location that had been a marketplace since the days of Dutch New Amsterdam, the corner of Wall Street and Broad Street. This open-air bond resale marketplace was lively but unregulated and therefore easily manipulated. Two speculative brokers, Macomb and Dewar, nearly succeeded in cornering the bond market. However, they defaulted on their debts in 1792, which caused America's first financial crisis, the Panic of 1792, as well as the collapse of the bond resale marketplace. From the ruins of this collapsed marketplace, 24 brokers assembled beneath the shade of the famous buttonwood tree growing on Wall Street and penned the Buttonwood Agreement, Signed May 17, 1792, the Buttonwood Agreement is the New York Stock Exchange's founding document and lays out the rules for the development of a safe, organized, and trustworthy marketplace. 232 years later, we uphold those same principles. Since our origins trading American Treasury bonds, the exchange has continued to list and trade municipal bonds over the years, issued by cities, states, and the federal government. Listing your bond on the New York Stock Exchange ensured that it would get more visibility and gave municipalities access to capital that they would not have been able to raise otherwise. Here are some examples. This clipping shows an announcement in October 1869 by the Secretary of the New York Stock Exchange Committee on Securities, detailing which North Carolina state bonds were good delivery. These bonds were issued by the state of North Carolina on behalf of several railroad companies. Governments issuing bonds on behalf of companies that could improve their state infrastructure was common practice at the time. This clipping shows an announcement in July 1873 by the chairman of the New York Stock Exchange Committee on Securities that states Missouri Sixes, or university bonds, are to be added to the list, the sale of which benefited the state university. University of Missouri was the first public university west of the Mississippi, and they continue to educate pupils today. Liberty and other war bonds. Financing a war effort is no small feat. In April 1917, the United States entered the war on the side of the Allies and immediately needed to raise money. The New York Stock Exchange supported the war effort by sponsoring bond buying drives and rallies for the war bonds known as Liberty bonds, right on our iconic trading floor. This photograph illustrates one such drive, during which the New York Stock Exchange's famous big board acted as a makeshift billboard, encouraging members and employees to buy Liberty bonds. The New York Stock Exchange also endorsed the purchase of war bonds after the United States entered World War II in 1941. Along with listing the bonds of municipalities around the United States, the New York Stock Exchange has also listed bonds issued by countries around the world. Foreign governments list their bonds on the New York Stock Exchange to leverage the status of the exchange as a nexus of global capital markets, raising capital for their own projects. Governments such as Portugal, Japan, and Austria have listed their bonds on the New York Stock Exchange, just to name a few. Here are some more examples. From the government of Jamaica, this is a 6 3/4%, $7.5 million external sinking fund loan bond issued by the government of Jamaica in 1981. From the Republic of the Philippines, this is a 6.5% 15-year external loan bond issued by the Republic of the Philippines in 1965. The Russian Imperial Bond. In 1902, the New York Stock Exchange listed a $1 billion Imperial Russian bond. That translates to about $27 billion today. As a thank you to the New York Stock Exchange for floating his bond, Tsar Nicholas II of the Romanov dynasty commissioned the House of Fabergé to make a gift. This Fabergé urn arrived in New York in 1904 and has been standing watch in our boardroom ever since. The New York Stock Exchange began as a marketplace for federal and municipal bonds, which the exchange continues to offer today. Bonds traded on the exchange have raised capital to aid in the construction of schools, hospitals, railroads, and other vital infrastructure for over 200 years. We believe municipal bonds represent investing in the most important capital any government holds, its people.
Well, for more on Intercontinental Exchange's role when it comes to fixed income today, I want to send things over to my colleague, Trinity Chavez. Trinity.
Thanks, Kristen. Yeah, so with the Federal Reserve recently implementing a 50 basis point rate cut, the fixed income markets are experiencing notable shifts in demand, pricing, and investor behavior. So we're going to dive into these changes and their impact on the broader financial landscape and how ICE's fixed income products and services are navigating these evolving market conditions with Chris Edmonds, the president of Fixed Income and Data Services. Good morning, Chris.
Good morning. Thanks for having me.
Now, I said it right there in the lead. Let's talk about how the recent 50 basis point rate cut by the Fed will impact the fixed income market in the broader sense.
Well, it's going to be about portfolio adjustment at the end of the day. If we look back prior to the announcement of 50 basis points, there was a huge consensus, is it 25, is it going to be 50? About half the market had positioned their portfolios for 25, another half the market was positioned for 50, and so now they're having to react to what that means. That's a little bit of time, that's what we've seen in the increased activity of late. But now they're all trying to position that what's going to happen next. It's always a forward-looking opportunity. So is it next going to be, there's a conversation about being 50, is it going to be 50, 25, is it going to be 225s, and where does that go? I think there's general consensus in the market that we probably end 200 basis points lower at the end of 2025. The question is, how do we get to that 200 basis points? And that's creating a little bit of the volatility in the market as a whole. Obviously, that's in the treasury market and treasury bonds that are sitting that way, but the corporate and the muni bond sector also are reacting to that because they have to make sure they maintain the spreads accordingly.
Would you say that there are any specific asset classes or durations that are experiencing more pronounced, I guess, effects from this?
Well, I look at it from the standpoint of the answer, your short answer is yes, but it's those who have a shorter duration because that's where the reaction is. Like the long end of the curve hasn't really reacted at the same level. That's why you're seeing some of the mortgage rates still not coming down. There's reports out this morning around mortgage opportunities there haven't really seen the uptick. They're up, but they're not up at the same velocity at which people thought would come at a 50 basis point move. So longer end of the curve assets or longer end of the curve duration assets, they're staying where they are. Shorter end's reacting to the move that the Fed made. Are
there any notable behaviors that are emerging with investors as a result of this?
I still think we see some in the commercial real estate market because there's uncertainty still around that part of the economy, how quickly it's going to recover. I think the rates that we're seeing in the commercial real estate market, while they have improved some, you still have a lot of inventory out there. You still have folks who are not coming back to the office at the same pace that they once were. So you're seeing that impact the demand side for big, large-scale commercial activities in certain pockets around the country. But that is, people are cherry picking around those opportunities that they see.
And we know that higher interest rates tend to benefit savers, right?
Right.
While lower rates, favor borrowers. Talk to me about this dynamic and how you anticipate that this will impact the broader market in the near term.
Well, it's really back to a supply and demand function, right? Yes, certainly we want to help the borrowers, but at the moment in time when we need to spur economic activity, this whole idea about the soft landing is trying to create that balance between we want to reward those who have been, not good with their money and the good stewards of their money, and at the same time we want to spur that economic investment for future growth. And so that's the balance that keeps going on out there, and I think we're going to see more of that. Some days you're doing really well. For a very long time we had very low interest rates. It was penalty for those who and that's why we sought yield in other asset classes, whether it be in equities or things of that nature. Came back in the last couple of years, you've seen that elevated interest rate, and people have shifted back to cash and holding more of that. So now that we see that balance is going to be important for people to maintain, and that'll be supply and demand of the instruments. And one last thing I would add to that is you also can't underestimate the amount of issuance that governments around the world are going to have to do in order to meet their economic growth. So there's going to be a lot of supply coming on the market for government and agency bonds.
Now, quickly, can you elaborate more on how ICE's fixed income services play a role in all of this when it comes to navigating the complexities and the challenges that come to an ever-changing market landscape?
Yeah, our ICE Bonds platform is a great retail platform that serves the individual investor community incredibly well around the country. We have our CDS business that clears both sovereign debt as well as corporate bond and other insurance on bonds that are out there. So both of those are performing very well for us at the moment. But those are two ways you can express those views. And then most importantly, we have the data business that we look after, and that data business is about the valuation. So when people are making those decisions and expressing those views at the end of the day, they have a way to make sure that they're accounting for that appropriately and holding themselves accountable to whether or not that is the right risk metric or not for their portfolio at any given time. So 3 elements of that, all mission critical along the way.
Amazing. Well, thank you. A lot of key takeaways there. Thank you for joining me, Chris.
Thank you.
Now we're going to send things back over to Kristen in Studio 1.
Trinity, thank you so much. And of course, our thanks to Chris Edmonds as well. And stay with us, everyone, because after the break, we are going to cover some of the major storylines to come out of the UN General Assembly festivities right here at the Stock Exchange this past week.
What sets it apart from its competitors? What makes it unique?
We're an AI native platform that manifests in a couple different ways. First things, we're analyzing emails or different types of sign events. We're looking at the same way a human analyst would. We then compare that to the behavioral baseline, right? So we do an abnormality detection or anomaly detection. That's where the name comes from. And the third piece is those approaches work really effectively. So we can stop attacks with an order of magnitude higher efficacy with this AI native approach.
Can you give me some real life examples?
The most common one is different forms of executive impersonation. So many of our customers have seen the bad guys trying to socially engineer people, get them to pay fake invoices.
How do you remain innovative and stay ahead of the curve?
Unfortunately, with very accessible tools like ChatGPT, every petty criminal in the world can now write phishing emails with perfect English, perfect grammar. They know everything about the inside of how an organization works. So it's increasingly difficult for humans, let alone technology, to distinguish what's authentic content versus simulated or AI generated. And so we have to go see that and do that and see the tools that criminals are using so we can build the countermeasures to defeat them.
Tell me about the biggest trends you're seeing right now in the cybersecurity sector.
So attacks are getting they're higher volume, but also they're increasingly more sophisticated.
Yeah.
I think the second trend is we're seeing just a increasing labor shortage, right, in cybersecurity. There's more, growing number of cybersecurity jobs relative to the number of people that are capable of doing them. And the third piece is just there's a growing surface area that customers trying to defend against. There's new applications every day. There's an exponential amount of data. So we have more data and more attacks and less people to look at it. People feel like the kind of human-powered paradigm of how we do cybersecurity is ineffective, and I think it's obvious AI must play some role to help save us.
So, we talked last year at RSA. What's new with abnormal security this year?
We're still the #1 solution for email security. We're still the best platform for understanding human behavior. But we've seen in the last year, some of these attacks are starting to happen more and more across platforms. So the first thing we're launching this week is an addition of protecting more than just Microsoft and Google. We're going to 15 new.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler in studio, and joining me now is Will Goodwin. He's Director of Operations and the NYSE Institute. Will, great to have you and get some time with you after what's been a very busy week.
Absolutely. It's great to be with you, Kristen, and really an exciting week for our whole team at the New York Stock Exchange, who came together to host a really impressive list of world leaders here.
Yeah, so I want to talk more about that. You mentioned a busy week here amid the UN General Assembly. What were your takeaways from this week and how it played out at the stock exchange?
Sure. Well, Kristen, in addition to many smaller delegations, we hosted 3 G20 leaders: President Milei of Argentina, President Ramaphosa of South Africa, and President von der Leyen of the European Commission, which of course runs the European Union. And across all of those visits, both in the public portions but also behind closed doors, what we really heard was a strong and enduring belief in the important role that public markets play in driving both global economic growth, but also ensuring global security, which, as we looked up to Midtown, where the UN is, we saw a lot of talk this week about geopolitical developments around the world. And, in sort of a contrast to some of the uncertainty there was 100% certainty around the excitement about the jobs, the investment, and the opportunity that's possible when the public and private sectors come together.
And if you can, Will, drill down a bit more in how the stock exchange, for our viewers watching at home,
Sure.
does help these countries reach their goals, get the investment that they need.
Sure. Well, as you know, Kristen, and as many of your viewers know as well, the New York Stock Exchange is home to the world's greatest community of public companies, over 2,400 companies, but they operate in 47 different countries around the world, and they directly employ 43 million people and multiples more indirectly. So the jobs, the investment, the increase in an operating footprint that a company listed on the NYSE can bring can make an incredible difference in these countries and these regions. And so when these world leaders want to speak directly to the leaders of those companies who are making those decisions that can have such a great impact, they come here to do so.
What is the platform that the stock exchange has been able to give these leaders specifically this week in their visits to Manhattan?
Sure. Well, as you know, for over 232 years, we've really held a unique and unmatched role here at the New York Stock Exchange at the crossroads of global business and public policy. And so those world leaders come here to engage directly with the business community and look for ways where we can collaborate between the public sector and the private sector to help drive that inclusive economic growth in every corner of the world.
What do you think will come out of this week here in New York?
Sure. Well, in many ways, Kristen, this is a continuation of the work we've been doing for 232 years, as I just mentioned. And so we will continue to welcome world leaders and their teams here to 11 Wall Street and help facilitate more of those conversations going forward. But looking at the week overall, I also hope that it's a reminder to your viewers and to our team here on the important role that international relations, that geopolitical developments can play and how they can affect our markets and our everyday lives, and why it's so important to stay engaged with what's happening here, but also around the world.
As we approach the presidential election here in the U.S., did other world leaders offer advice to Americans?
Sure. Well, this is a big year, as you know, Kristen, for elections worldwide. Voters in more than 80 nations and territories are expected to head to the polls by the end of this year. So, of course, with those elections can come changes.
That's right. Will, we got to take a look at the bell.
All right, let's go.
All right, trading officially underway on this Friday. Stocks looking to wrap up what has been a winning week on the back of some solid economic data and a host of IPOs, which we've been covering here at the Stock Exchange. Joining me now to talk more about the markets is Kevin Gordon. He's a senior investment strategist for Charles Schwab. Kevin, thanks so much for joining.
Hey, Kristen, nice to see you in your relatively new seat.
Kevin, I'm going to get my audio fixed though so I can hear you, but we know inflation data this morning certainly coming in a little bit better than expected. What does that mean for investors?
So, I think it continues the story, what has been the story for inflation of disinflation. I think it's a relatively solid and increasingly benign backdrop. Not that, risks don't exist anymore, but what was evident in the data this morning, but what has been evident over the past several months is that you're on a really solid path in terms of getting to the Fed's 2% target. Core PCE out this morning as of August on a 3-month annualized basis is, still at 2%. There was a slight uptick from the prior month, but I think the important part from an inflation standpoint is that when you sort of survey the economy and you look at different parts of where inflation could be coming from, it's kind of tough in from our perch and from virtually any perch, I would say, to see where a lot of inflationary pressure is going to come from. And in particular, if you look at the labor market, you still believe in, sort of the strength of the Phillips curve and whether that relationship exists. There's not a lot of pressure coming from labor anymore. You've got unit labor costs running at 0.3% year over year as of the second quarter. You've got, this continued slowdown in payroll growth and then the drift higher in the unemployment rate. So I think it's been, right for the Fed to shift to focus on labor. But at the same time, you've had a still relatively resilient labor backdrop as inflation has continued to roll over. So, it's not mission accomplished and the Fed hasn't declared victory, which I think is the right move. But I think that the broader story of labor staying resilient with disinflation occurring is still with us and probably will stick with us for the next several months.
Kevin, we're looking at fractional gains here as we look to round out, again, what has been a positive week for stocks. And what I'm hearing from you is it sounds like that soft landing might actually be in store. A big question as to whether or not the central bank could engineer a soft landing, avoiding an economic recession amid its interest rate policy. Does the GDP growth of 3% give you more confidence on that front?
So, I think of soft landing in terms of sort of a process, not as much a destination. I think the destination is actually you either get to an expansion or you get to a recession. So to me, you're sort of living a version of the soft landing right now. And, we've had a more nuanced take about soft landing versus recession. We think that, already some parts of the economy objectively have gone into their own little recessions. But if you were to look at everything in aggregate, yes, it's virtually looked like a soft landing. And I think it's even been supported more so by the fact that when you start to look at some of the revisions that we got for GDP, yesterday morning for the past several years, going back, almost 4 years. That to me was the most important story and has been the most important story from a data perspective this week, because not only did you have relatively significant revisions to the upside for GDP, but you had significant upside revisions for gross domestic income. There had been, a huge gap between the two over the past several years, with a lot of economists actually forecasting that GDP would sort of catch down to GDI, but you had the opposite happen. So what that means from a corporate profit perspective, from a labor perspective, from a revenue perspective, is that things have looked relatively healthier, and it actually is consistent with sort of a more resilient labor market picture. So I think all of that data, even though it's a look back and even though it's history now, is supportive of the fact that we've sort of been living in a soft landing environment. So from here, yes, you have to watch the trajectory of labor. You have to keep in mind the tightness in monetary policy and how much that's going to impact the economy. But we're heading into this period, on stronger footing than we previously thought.
And we've seen several IPOs of late. Investor sentiment seems to be improving, of course, a lot of that fueled by the recent action by the Fed just last week. Kevin, do you think that stocks can continue to advance from here?
I think so, but from a valuation perspective, there's probably not as much to be squeezed out of the upside in a PE multiple or a price to sales multiple, because you're trading at pretty rich levels relative to history, regardless of the larger cap index you're looking at. It's a little bit of a different story for small caps, but that's been the story for a while now. I think from a breadth standpoint, you're still in a great spot for the S&P 500. You've got close to 80% of its members trading above their 200-day moving average. You've seen a little bit of a softening and a pullback in the number of companies, or the share of companies that are making new highs, but you're not seeing a pickup in the share that are making new lows. So you're kind of, I think, in this, moderate sort of tepid territory where, gains are probably still with us for some time, and you've got some underlying strength. But I think it's also the market's way of looking ahead and sort of trying to suss out if there's any labor weakness coming, or, what the trajectory of a softening economy actually looks like. So I don't think it's anything sinister, but I think that the breadth picture right now, especially when you compare it to other cycles where the Fed started cutting and started off by cutting by 50 basis points, you're in a much stronger position from an equity market perspective. So I think that's definitely the more positive aspect of the market, and what the signal's been sent, the signal that we've sort of gotten over the past couple of months.
Where do you see opportunities in this market?
So, the focus on quality for us has been a big thing, and it may seem sort of like the ultimate statement over the past couple of years, but when you look at the factors and the characteristics of the market, at least in the U.S., that have been outperforming and that have been leading consistently since this bull market began, almost a couple of years ago in October of 2022, the sort of consistent leadership across sectors and up and down the cap spectrum has been within high quality parts of the market. So companies and industries that have relatively strong profit margins, that have strong revenue growth, that are able to manage their labor costs well, high interest coverage ratios because of the rapidity with which rates went up. That has been the more sort of consistent area to find leadership, and we think that's probably going to continue to be the case. Even though you've got rates now rolling over, it's not that the Fed is getting accommodative and that policy is getting stimulative. It's just that it's getting less restrictive. So if you're staying sort of in this net restrictive territory, but things are starting to ease sort of at the margin, that probably still benefits high quality parts of the market. I don't think you're going to get this sustained significant outperformance from lower quality sectors or industries or even stocks that would tend to outperform after the Fed cuts aggressively. So I think that's an important distinction to keep in mind, is to stay up in quality in terms of looking for and screening for those characteristics, regardless of the sector that you're in.
Kevin Gordon with Charles Schwab. Kevin, always a pleasure. Thanks so much for your insight, especially as we look to round out yet another winning week here on Wall Street.
Thanks so much.
Well, stay with us, everyone, because we'll have more coverage from the stock exchange after this short commercial break.
Wonderful. So why don't we start off by you giving me a quick overview of the company and also share some of the progress you've done over the past 6 months.
Sure. It's been an amazing 6 months for us. The way you should think about CoreWeave is a specialized cloud computing company. And what we mean by that is that we have built a cloud that is purpose-built from the ground up in every possible way, from the hardware through the software to ultimately clients, to be able to serve the most compute-intensive workloads on the planet. And so we've built our software stack to be able to support artificial intelligence. We are the workhorse that is training the AI models that all of us are using on a regular basis.
Now tell me about the progress over the past 6 months. I mean, incredible milestone you're here today.
It's been, like I said, it's been an incredible 6 months for us. It's actually been an incredible 2 years for us, because when we built our company, we really built our software to be able to scale infinitely and to be able to support these type of workloads. But the speed and the scale of the buy interest and demand for our products obviously has caught everybody by surprise. And so we have been really working very, very diligently to build larger and larger fabrics, larger and larger supercomputers all across the country into Europe in order to support the demand of our clients for training models, for serving models. Really the backbone of artificial intelligence as it's being used at this point.
Now, amazing milestone. Raised $1.1 billion on your Series C. Tell me, how are you planning to deploy this capital?
Yeah, so $1.1 billion is a lot of money. It's actually been a series.
Welcome back to NYSE TV Live. I'm Kristen Schuller here in studio at the Stock Exchange. Well, yesterday's Carbonomics 2024 event held here at the NYSE featured an array of panels and fireside chats. Trinity Chavez spoke with Rubicon Carbon CEO Tom Montag and Chief Science Officer Jennifer Jenkins about how their company's solutions are helping propel a net zero future. Take a look.
We were started up by TPG Rise Climate Fund, and the idea that voluntary carbon markets were going to be an important part of the solution for climate change. And the basic essence was, this is a very difficult market to understand, and being in the markets, it is a difficult market to understand. And if you think, I'm on the floor of the stock exchange here, if you think stocks are hard to figure out every stock, figuring out every project is really hard. And so the premise was that we need a great science team to look at projects and help us to assess what are the good ones, and then package them in a way that people can buy kind of ETFs of carbon credits. And so that's what we offer. It's called a Rubicon Carbon Ton.
And Jen, can you talk to me about why carbon credits are such a vital tool when it comes to achieving net zero emissions?
Yeah, we absolutely are going to need the carbon market in order to achieve our aggressive climate goals, right? We know we want to, in order to limit the worst effects of climate change, we know that we're going to need to reach net zero by 2050. We know that we're going to need $275 trillion by 2050. That works out to, for those who do the math, just about $10 trillion annually for the next 2.5 decades, right? So where is that money going to come from? Most likely not from philanthropies, most likely not from governments. We need the private sector to get involved. The private sector is able and willing, but they need the market, right? Because that's how the private sector engages.
And Tom, can you tell me more about who are Rubicon Carbon's customers and what sort of carbon credits are they looking for?
Well, everybody's our customer in that sense, but our main customers have been the people you've mostly seen in the news. So the one public one we do was Microsoft, where we are developing a project with them that will feed into the Rubicon Carbon Ton in Panama, where we're reforesting a project in Panama. But there are all sorts of companies, from consumer goods companies to major entertainment artists to Formula E and a driver in Formula E. So the whole world, most companies have this goal, and most companies are doing something in our space. And so they're the names in America you would think of.
And you've had quite an impressive background with your experiences. You were the Chief Operating Officer at Bank of America, President of Global Banking and Markets, and other senior roles in banking. So talk to me about this transition from where you sit today and how your past experiences contribute to what you do for Rubicon
Just sitting
Carbon.
on this floor, I was thinking about that, because I started at Goldman Sachs and I ran the derivative business at Goldman Sachs, and we worked a lot with a person named Dr. Fisher Black, and Fisher Black is very famous, as you know, and Black-Scholes option model. And then I got into this world, and I was so fortunate to be the kind of the Fisher Black of this climate science. Yes. And how is carbon? What are the equations for carbon being saved by trees and all these kind of things? It's a different thing, but it's kind of similar. And so we're building a market from the ground up, really, with people, with the Fisher Blacks of the carbon world. And so we feel we're in that stage where we're building products and stuff that have the science backing and validity, and will provide the liquidity and the form and the comfort so that more people will be able to participate. And by the way, remove or avoid more carbon going into the environment.
And both of you have had a very busy week in New York City for Climate Week. Talk to me about, you've attended so many panels and events. Talk to me about some of the key takeaways for you. Jen, we'll start with you.
Yeah, we're having a very different conversation this year than we were having last year, right? Even at COP last year in Dubai, and certainly at Climate Week last year, right? What I'm hearing now is, I'm hearing a lot of momentum around the voluntary carbon market. We had VCM Day yesterday where high-level people talked about what is needed, right, to get the market going. We're no longer talking about do we need this market. Now we're talking about how do we make it bigger? How do we make it stronger? And to me, that's the really exciting part.
Tom, what about you? I mean, you've been a part of many panels and discussions lately too. So talk to me about some of the key findings.
Well, I took away a little thing of biochar from my last thing. So they were giving us little things of biochar to show people. So this is one of the products that somebody that we've invested in is creating that stores carbon in the environment. But the market went through a little phase of SBTI, which is very important. The science-based technology had kind of not didn't come out in favor of carbon credits yet, and so the market had a little lull. And so this has been so well timed because the momentum that Jen is talking about, you can really feel it, where people want to move forward with that and understand how much money that we need to raise in this market to be able to make this a real market.
All right, thanks to Trinity Chavez for that interview, and we'll hear from today's bell ringer after a quick break.
What sets you apart from your competitors? What makes Webull unique?
Well, the fact that we are mobile first is a big differentiation from legacy retail platforms. So we offer really strong, sophisticated analytics and cater to a more sophisticated type of retail customer, making them better at investing.
Congratulations. You recently celebrated your 6th anniversary of Webull's founding. Over 40 million downloads globally. Tell me, what would you attribute this success to, and how are you going to continue this momentum?
Well, there's many things. I mean, just the team in and of itself, right? Our technology team is second to none. And we've had some really amazing timing along that process. We started as a zero commission platform, which we didn't have to adjust to the zero commission environment in the US. We started as zero commission, which is really, really important for our ecosystem and for our business model. We utilize technology to make sure that we can shift to different retail trader demands. And we've had timing. Like I said, there was little thing called pandemic that certainly made a retail investor out of most Americans. And we had the ability to adjust, like when rates started rising and customers demanded yield, we were able to offer those products quicker than our competitors.
And you were named president at the beginning of this year, 2024. Have your priorities shifted in any way since taking on this role?
Traditionally, I was tasked with building out the U.S. brokerage business for Webull. And it is still the core business at Webull Corp, but we have expanded into many different markets internationally. And I'm also responsible for expanding all those broker-dealers globally. So as you can imagine, the sun never sets on Webull.
How do you reach all of these goals while still meeting customer needs and demands?
Not easy. But we have to look at the landscape we're in. And one of the things that I tell my people that I think is really, really important is that.
Welcome back to NYSE TV Live. I'm Trinity Chavez, and we are here on the trading floor. And to join me now to discuss all about the exciting day is LeeAnn Rohmann. She's the founder and CEO at Legacy Education. Good morning.
Good morning.
Such a great morning. I mean, you have really a great crowd here today. You just opened up the U.S. equity markets. How are you feeling?
Surreal, overwhelmed, excited, joyful, and humbled. Probably so many emotions that it's hard to just say one.
And Legacy Education has made such a significant impact on the overall education landscape. Talk to me about the significance behind this. What's your mission and how you came to start Legacy Education?
Our mission at Legacy Education is to deliver a quality education that literally leads to getting people jobs. And quality education is really what this is all about, because we are teaching programs in allied health, veterinary, and business, and these are key programs that you need to ensure that people are trained well in order for them to get to work and to impact and change people's lives for the better.
That's amazing. And you know, with the rise of digital learning platforms and an evolving technological landscape, how would you say that legacy education is staying ahead of the curve and innovative, but still obtaining the integrity of education for its students?
Well, we are very excited that the way technology has transformed things to allow us the opportunity to be able to take advantage of teaching our students online. So all of our students do learn their programs, part of their theory online, but every single one comes into the campuses still, for their laboratory and to prepare them for extern and clinical sites. We're embracing technology in a way through AI to do that, to really build the students' skills in areas that are going to make a difference for them.
Making a difference in the world, one student at a time. I love that. Well, LeeAnn, thank you so much for joining me. Congratulations on your special day. And I'll let you join your friends and your colleagues to continue the celebration.
Thank you so much. It's great to be here.
All right, take care. Now we have a lot more to get to, but before we do, we're going to take a quick break and we'll be right back.
Carson, welcome to Floor Talk. I want to start off with a quote. NVIDIA CEO Jensen Huang famously said, "Software is eating the world, but AI is going to eat software." An obvious play on investor Mark Andreessen's famous words. So Trevor, decode what this means for business leaders.
So I'm a big fan of Jensen, obviously. Inspirational leader, transformed the company over the last 25 years, is also a customer of ours. And at the end of the day, Andreessen made the comment in 2011 about software eating the world, and we've seen what's happened since then. The companies he referenced, he referenced NVIDIA, he referenced AWS, Amazon, Facebook. Then was, he called it a startup that was learning how to be a large company, and obviously we see where Facebook has gone. Generated billions of dollars in shareholder value across the board, leveraging software to really take themselves to the next level. And now when Wang was talking about it, from his perspective, he was really referencing what we call machine learning and what we call deep learning. And he was talking about the fact that we're going to see the impact of AI in healthcare, the healthcare industry. We're going to see the impact in transportation. But I don't even think Jensen realized the impact and the transformation that generative AI is driving today, 5 years later. Funnily enough, he made this comment in May of 2017, and a month later, Google came out with this transform architecture, which is a precursor to what OpenAI and ChatGPT, as we all know it, is driving. So when I think of where Jensen was going, I agree with him. AI is eating software.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler, and as we look to wrap up the week on this Friday, listening to a podcast might be in store for your weekend. Well, this September saw new episodes of the Inside the Ice House podcast, as host Lance Glynn sat down with CEOs of NYSE-listed companies, business leaders across different sectors, and even some superstar athletes who have performed on the biggest stage. Well, first was Lance's conversation with Scott Barber, president and CEO of Advanced Drainage Systems, with the NYSE ticker symbol WMS. That was episode 435, if you're following at home. Does have a focus on water management and water solutions, with Scott detailing the company's sustainable suite of products and how the company is reusing and recycling the world's most precious resource.
Our reason is water. We manage stormwater. Water is the world's most precious resource. We do this in communities around North America, primarily. And we think it's a big mission to help manage that stormwater and on-site septic through our Infiltrator business. So what we do is, it rains. Something has to be done with that stormwater or runoff. It comes off of impervious surfaces like a roof, a road, a parking lot. And it's our job, our products, kind of take that water and then get it to the right place, store it in many cases, clean it up, and then reintroduce it into the watershed, a lake, a river, or stream.
Well, later on episode 436, Pete Ash sat down with Inside the Ice House with Mark Leisure. He's the chair and CEO of Phillips 66. That's the NYSE ticker symbol PSX. Again, for those following along at home. And guided by core values of safety, honor, and commitment, Mark is leading the diversified energy manufacturing and logistics company to provide energy and improve lives.
You know, you think about it, providing energy does improve lives. Your life gets pretty miserable pretty fast if the lights go out, if you can't get the fuel you need to get from point A to point B, groceries don't show up on the shelves, you can't get your kids to school. It's a tough life without energy. And so our mission is to make sure that people have access to the energy and the materials they need to have a great lifestyle, to have a sustainable lifestyle. And over the years, we know that it's going to evolve. The kind of energy we may be providing to improve people's lives may evolve from what we do today, but we're committed to ensure that people have access to low-cost, affordable, sustainable, abundant energy, just like we've done for the last 125 plus years.
From the boardroom to the gridiron, New York Giants legends Victor Cruz and David Tyree also joined. That was episode 437, making the trip to the New York Stock Exchange to ring the bell as they celebrated 100 years of the New York Giants football franchise. They reflect on the memorable moments of their careers, those Super Bowl wins, and the joy of playing and beating rival New York Jets.
Anytime you play the Jets, it just brings a higher level of discipline, right? You know what's at stake. You know that the bragging rights are there. You know that it's going to be a game, especially the one in 2011, like leading into the playoffs. You knew what was at stake there. Like, we had to win out to the rest of that season just to have an opportunity to get into the playoff hunt and into the playoffs. So we knew what was at stake, and the same for them. Like, they on the flip side, they had to win, and they were in a position to make it to the playoffs, and they knew what was at stake as well. So being part of this fan base for years, being from the New Jersey area, you know what it is to have bragging rights in that Snoopy Bowl, and I'm just happy I'm on the right side of history on that one.
You can listen to these as well as any previous and future Inside the Ice House episodes wherever you get your podcasts. And you can also watch the full videos of these episodes on tv.nysc.com. Don't forget to download our app, NYSC TV, and join us every Monday for conversations with leaders, entrepreneurs, and visionaries by scanning the QR code right on your screen to listen. All right, well, joining me now from the trading floor is Trinity Chavez. Trinity, great to hear your interview with the CEO of Legacy earlier. What's the pulse on the floor?
Well, the pulse on the floor right now, there's still a lot of activity happening as the market's just open. We're seeing a lot of green on the screen. The Dow right now is up about 150 points, I would say. We're seeing a lot of activity because it's indicating that a lot of economic data has come out signaling that the Fed made the right decision with the rate cut. And the traders that I'm talking to, they're anticipating more rate cuts to come, as this is really laying the foundation on a strong end to 2024 and hopefully a strong start to 2025. Kristen?
That's right. We've had a very busy week here at the Stock Exchange. Trinity Will Goodwin giving us a good wrap of the UN General Assembly, talking all things climate. And I know you spoke about that with your guests as well. On top of that, investor sentiment is strong, and we see many data points pointing to that. Some great IPOs this week, of course, celebrating that strong investor sentiment. A stock set for a winning week as well. It's going to do it for our coverage today. I'm Kristen Scholler in studio.
And I'm Trinity Chavez. We'll see you next time.
I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.